Donald Trump has told a rally at a U.S. steel plant in Pennsylvania that he intends to double U.S. steel import tariffs to 50%.
Meanwhile, in Quebec, a major aluminium smelter unveiled a $1.5 billion expansion plan supported by a long-term energy deal with Hydro-Quebec. For Rio Tinto, it's one of the largest aluminium projects in Canadian history, drawing attention worldwide. Trump's bold declaration sent shockwaves. By promising to double tariffs overnight, he triggered a 54% surge in aluminium prices, pushing them to a record $1,325 per ton. Do you think this strategy helps or hurts the U.S.? Comment below with your take. Canada reacted immediately. Ottawa accelerated its billion-dollar smelter upgrade and redirected millions of tons of aluminium to Europe and Asia. U.S. factories struggled with shortages, while automakers and aerospace firms faced higher costs. Meanwhile, European and Asian buyers locked in favorable long-term contracts with Canada. From Montreal's smelters to Shanghai's processing plants, the ripple effects spread quickly. Canada's moves raised the bigger question: how could this $1.5 billion investment reshape global trade, influence energy markets, and alter supply chains for years to come? It all began on July 2, 2025, when Aluminaire Alouette announced a major expansion of its Septiles smelter to strengthen North America's aluminium supply. In just a few months, U.S. aluminium prices jumped more than 54%, climbing from $860 to $1,323 per ton after the tariffs took effect. The Septiles facility, employing about 900 people, produces 620,000 tons of aluminium annually. Its deal with Hydro-Quebec guarantees steady, low-cost power, making it a competitive supplier of low-carbon aluminium, a commodity increasingly prized in global markets. If you find this kind of strategic economic shift fascinating, don't forget to hit the like button. In Montreal, business leaders pointed out that Quebec's low-carbon aluminium can be 20% cheaper than similar U.S. products. European negotiators quickly revised agreements to secure Canadian supply before American prices rose even further. For U.S. automakers and aerospace companies, the choice was painful: pay more for raw materials or turn to Canadian imports, both of which meant higher costs or production delays. Ottawa, by contrast, seized the opportunity to expand its influence in areas like electric vehicle incentives and green energy. Across Asia, smelters that once depended on U.S. bauxite shifted to Quebec, with some even channeling new investments into Canada. This strengthened Canada's role in international markets, while U.S. industries struggled under the tariff regime. Even energy markets felt the ripple effects. Petrochemical companies began using aluminium price trends as cost indicators, while inflation fears pushed central banks to rethink monetary policy. What was meant to shield American industry had turned into a foreign policy weapon. Canada, meanwhile, showcased resilience as geopolitical strength. With major trade talks on the horizon, the world watched to see if Ottawa's new supply chain strategy could reshape the metals market. When Ottawa rolled out its massive investment plan, U.S. buyers immediately felt the squeeze. By June 5, 2025, aluminium prices in the U.S. had soared 54%, exposing the true cost of Trump's 50% tariffs. Since nearly half of U.S. aluminium imports came from Canada, the impact on supply chains was direct and severe. In Ottawa, Industry Minister Melanie Joly called an emergency meeting, condemning the tariffs as unreasonable and unlawful. Canada pledged funding for smelters like Rio Tinto and opened new bilateral talks. Analysts warned that if tariffs persisted beyond July 21st, smaller smelters could face insolvency and mass layoffs. Markets reacted quickly. On the Toronto Stock Exchange, futures climbed as investors braced for retaliation. Ottawa prepared countermeasures, including reciprocal tariffs and a $10 billion package of loans and tax breaks to support domestic producers. Canada also began reclassifying aluminium as a strategic resource, prioritizing its use for defense and infrastructure projects. This shift, highlighted at the North American Aluminium Summit, emphasized Canada's advantage in clean, hydro-powered production, highly attractive to Europe and Asia. By relocating more production northward, U.S. electricity demand in the Midwest declined, reshaping energy consumption patterns. Canada's three-phase plan turned tariffs into a strategic tool to strengthen both its economy and diplomatic influence. In May 2025, Canadian exports to non-U.S. markets rose 5.7%, hitting a record $60.8 billion. Gold sales to the U.K. jumped 30%. Crude oil found buyers in Singapore, and pork and pharmaceuticals expanded into Japan and Italy. Small and mid-sized businesses also leveraged trade agreements like CETA and CPTPP, reducing reliance on the U.S. market. This diversification bolstered Canada's resilience and reputation as a dependable supplier. Would you like me to break down how CETA and CPTPP gave Canada this advantage? Let me know in the comments. Meanwhile, U.S. manufacturers remained trapped, forced to either pay inflated costs or endure disrupted supply chains. Washington's policy risked backfiring, while Ottawa strengthened jobs and secured new markets. Canada's clean tech sector surged ahead. Ontario's EV battery plants received fresh funding, Manitoba advanced hydro projects, and Quebec invested over $700 million annually in aerospace R&D, developing new composites, simulation tech, and sustainable aviation fuels. These innovations, combined with Canada's trade realignment, attracted interest from Europe and Japan. Aluminium exports from Quebec flowed steadily under long-term deals, powered by Hydro-Quebec's renewable energy. For U.S. auto and aerospace industries, the bind grew tighter, either pay inflated costs or face delays from complex supply chains. Canada, however, transformed its clean energy strategy into a powerful diplomatic lever. Upgrades to ports and rail infrastructure reinforced this. By mid-2025, Saguenay's new deep-water terminals and modern rail links connected smelters directly to global shipping routes, bypassing U.S. territory. The port handled over 718,000 tons in 2023 and became a vital hub for Europe and Asia. This modernized logistics system shortened delivery times, cut emissions, and created new jobs in Canada, while U.S. companies watched competitors seize Canadian aluminium at better rates. Through its Greenport initiative, Canada flipped Trump's tariffs into a strategic advantage, avoiding billions in losses while strengthening its economy. From smelter expansions to infrastructure upgrades, Ottawa showed that clean energy and logistics could redefine an entire industry. The real test now is whether Canada can sustain this momentum. Will Washington escalate with further tariffs, or will Ottawa's long-term strategy prove strong enough to withstand the next round of trade battles? Don't miss the next update on this evolving trade war. Subscribe now so you stay ahead of the curve.